Welcome back. You're still watching Countdown with us, and 25 minutes to go for markets to close. And the weakness, by the way, continues. We're almost once again at the lowest point of the day. Nifty is down 122 points. And for the week now, by the way, we're down almost 3.5%. Bank Nifty is trading around the mark of, I think, a mild bit of recovery because it did reach the mark of 29,000. But still, it's sitting with cuts of 270 points. A lot of individual stock reactions also seen. Chennai Petro just came out with the numbers a while back. I was just checking the data. There's a lot of short build-up which has come in. Open interest has surged quite significantly for this counter just after the numbers came in, and the stock's down almost 2% in trade. Other than that, you've got Voltas, which is in focus. The numbers come out tomorrow, but net, there are certain stocks, I think, from the small cap arena which are doing well. Something like Shimaru, that's gone up 8%. On Mobile has seen gains of almost 6% in trade, and Panama Petro, that's the other stock which has seen gains of almost 5% right now. But which are the Fab 4 stocks of the day? Let's head across to Sharad Dubey to find out. Hi Sharad, good afternoon.
Hi, India. So the first stock we have picked up is Newgen Chemicals, which is up by almost 23% today. Now, if you see, the stock is in the upper circuit, and today it was listed in the bourses, and the listing price was at around 251 odd rupees, and also it was around 17% gains for the premium to the issue price. The second stock we have picked up for for Fab 4 is Dhanlakshmi Bank, which is up by almost 1.5% as the asset quality has improved, and also the provisioning norms have improved, and which is the provisions stood at around 16 odd crore rupees versus 80 crores on a year-on-year basis. The next stock we see is Embassy REIT WAC, which is up by almost 3.5% after JP Morgan came out with a report stating that there's going to be a 6% dividend increase in terms of earnings going into FY 2022-23. However, in their report they maintained there will be an overweight with a target price of around 300 odd rupees. The last stock for the Fab 4 is Kajaria Ceramics, which is up by almost 1.37%. This is based on a high open interest build-up which has been seen, and also the volumes are trading twice its 20-day moving average.
All right, thanks a lot for that, Sharad. So those are the Fab 4 stocks of the day. Newgen Chemicals, remember, the new listing for today, trading at a 22% premium to the issue price of about 215 rupees per share. This is pretty much in line with what Polycab did on the day of its listing. I think Polycab was an issue price of about 538, listed closer to 620, went all the way up until 665. And actually is not doing all that badly for a very skittish market that we are in. So it's actually holding pretty steady. And, you know, not losing, not gaining. It's just about holding its post, about 645 for Polycab India. Siddharth Sedani of Anand Rathi is joining us in the show. Siddharth, good afternoon to you. A quick comment from you on what we're witnessing right now over the last few days, and how would you position yourself?
Good afternoon. Overall, there is volatility in the markets on the back of global as well as domestic markets. Global markets, as we know, that the indication of trade war again has popped up. So that is also one of the reasons. Slowing down of the economies, global economies, also one of the reasons of the volatility. But most of the things would be attributed to the domestic side of the business, where we have seen that election results coming up on 23rd of May. That's creating a little bit of a volatility in the market, and that was very much known that in such a situation the volatility will be also high. If you look at the VIX, the volatility index is also at the high point of the time. Having said that, right now one has to keep a wait and watch kind of a situation. If you really want to go out for shopping, it has to be very selective in nature. Unless you wait out for some more days, let the volatility go away, and very selective few stocks from few sectors can be picked up at the current levels. Apart from that, wait and watch would be the strategy in the market.
All right, Siddharth, just stay on with us. We'll come back to discussing many more stocks with you. But onto the chart of the day. Indian government's thrust on the use of cleaner fuel and cut down on pollutants may have had an impact on India's import bill. The latest numbers for the last financial year shows released by Petroleum Planning and Analysis Cell shows that the growth rate has actually moderated. Samit Sarkar, he's here to take us through all of this detail. Samit.
So if you see in FY19, India's fuel demand rose the slowest in the last 5 years, and that is because the government of India promoted usage of cleaner fuels in FY19. Now, the government had banned usage of pet coke due to rising pollution levels and pushed for use of cleaner LPG for cooking instead of kerosene. Now, because of these two moves, the pet coke and kerosene consumption declined by nearly 20% and 10% respectively compared to last year. And because of this, the total fuel consumption in India rose by only 2.66% in FY19, which is the lowest since FY14. Now, if you see, for diesel, for consumption of retail fuels like petrol and diesel, now they remain largely unchanged because it grew compared to last year. However, at a smaller rate in FY19. Now, if you see petrol and diesel consumption, they increased by nearly 8% and 3% compared to last year.
Okay, Samit, thanks a lot for bringing that chart of the day. Just want to pull up Bandhan Bank. That stock's fallen in the last 5 to 10 minutes of trading, currently sitting with cuts of almost 3.5%. Ruchit, on the charts with the current fall, what do you make of it? Would you take any position here?
I think the broader trend continues to remain positive, as recently we have seen a higher top, higher bottom structure formation. But most of the names from the banking space have been witnessing this corrective move since last 2-3 days. If we look at some of the support levels of Bandhan Bank in this correction, they are coming around 545 levels. So some more dip could be seen in next few trading session. It's a buy on dip counter. So whenever it comes near the support of 540 to 545, one should use that as a buying opportunity.
Okay, that's Bandhan Bank down almost 3% in trade. Also Cox & Kings, by the way, that's down 7.5%. That's touched its 52-week low in today's trading session. Eveready has been locked in lower circuit, I guess. And a lot of other stocks which have seen big moves coming about. Z, we've already highlighted. Pull up Reliance Capital, that's down almost 5%. I guess the fall has just come in the last half an hour or so. Reliance Capital, not exactly, but it did recover from the day's low, currently sitting with cuts of almost 5% in trade. Sun TV is the other one. I think since morning this counter has been weak. Manav, would you take a bet here at 530 levels for Sun TV?
Yes, in fact, looking at the overall formation, the stock is a very good STBT kind of a scenario whereby it has breached its previous support levels. The breakdown has accompanied by good amount of volumes. It's trading below its short-term averages, and most importantly, the prices are also forming a bearish formation on the intraday chart. So, on the immediate basis, one can maintain a stop loss of 536 on the upside and can expect lower targets of 515.
All right, those are some quick technical calls coming in there. But since we're talking about technicals, we had a very important voice in the morning, Gautam Shah of JM Financial. He spoke about the long-term outlook for India and he said it remains positive. But how will the unraveling happen over the short term? That's the question. Earlier on, we spoke to him on how traders are positioning themselves with the markets being at the levels that they are. Hear him out.
I'm sure it's going to be a sharp and swift move. I was just discussing this with a number of analysts yesterday, that in the past when the market was so light and so on speculative positions and heavy on hedge positions, how has it played out? Typically, this is more positive than negative because I think people are extremely fearful. Margins on the exchanges have gone up quite a bit, and therefore that's anyway not allowing a lot of participants to get in a big way. And given the kind of premiums that you have right now, I think people are very jittery about taking positions. So as I said, since the market is a lot more prepared for a negative eventuality, or a possible negative eventuality in the next 2.5 weeks, I think, this market will find a floor very easily. And that's probably the reason I don't see much decline. Let me add to this. Global markets have had a phenomenal run themselves in the last 1.5 months. If you look at most markets, they have gained about 20% from their recent lows, and they were ripe for a pullback. The pullback came thanks to the excuse from the tweet from the president. But I think even the global market pullback should settle down in a few days. That's what the charts are suggesting. And if that happens, I think India can get back on track very easily. The only negative, as I see right now, is the market breadth. Because while the Nifty might still be at 11.5, I think the kind of damage that we've seen across the board is quite discouraging. But I'm sure that this disconnect between the large caps and the mid caps will gradually get settled, possibly around the election results time.
while this is about the index, and you just highlighted that the broader market space, the damage is far more concentrated than what we've seen for the index itself. That's where the crux of it lies, because it's the individual stocks that a regular person takes a position in. How would one approach individual counters that are seeing the kind of sell-off that they have in the recent past? And it's not just sector-specific, like consumption, where all of the stocks have started to move lower, or cement as a pocket, where most of the stocks have started to move higher. So, you have to be very picky and choosy.
Well, there are 2 points here. Number one, you don't catch a falling knife. I think we've seen that in the last many months, and particularly in 2018, where the best of names with the best of fundamentals in the mid-cap space lost 40, 50, 60% just like that. So that cannot be a basis to go long. I think the price action needs to show some strength, which has been missing in the mid-cap space. But also let's realize that the mid-cap index rallied from 16,000 all the way to 18,500, which is a good 2,500 point rise in the last couple of months. And that rise, I think, is just getting digested, and around the 17,000 mark on the mid-cap index, I think you will have the bulls coming in once again. But as I just highlighted, there is so much pessimism suddenly in just 2 trading sessions that the market is just getting lighter and lighter by the day, and it will only help it create a much stronger foundation once the next leg up starts. And I'm very clear, looking at the medium-term charts, that the mid-cap index will rebound from here. In fact, we have a target of about 20,000, 20,500 on the mid-cap 100 index, possibly in the next 1 year. So that's a good 30%, 35% to play for. And I think the SIP money angle, the fact that 9,000 crores is coming into the system every month, I think that's chasing the top 20 stocks. And that's probably the reason the top 20, 30 stocks have been very, very steady. And every time there is a smallish decline, they find a lot of support. I think that's the only real explanation that one can have right now.
All right. I just want to pull up what's been happening to Maruti, Gautam, and this is a stock that is difficult to understand with the kind of moves that it has been making. I mean, fundamentally, whatever has been happening to the auto pocket as a whole, individual stocks within the auto pocket deserve attention, and Maruti is the only one that's been, in terms of the volatility that the stock price has seen, the highs that it has made compared to the lows which it's trading at right now. How does one approach this?
Well, clearly, it's been an underperformer. It's a stock that is not moving with the market. It's a stock that goes down every time the market sees a little bit of a dip. And therefore, you don't want to just be brave and be a buyer just because it has fallen 20, 30% from the top. I think Maruti has been a debate in our office as well, between the fundamental and technical analysts. And I'm strongly of the view that while Maruti was a poster boy stock for the last couple of years, giving almost multi-bagger returns for a large cap stock, I think the times have changed. And I think the market needs to realize that the kind of leadership that many of these auto stocks had, I think that's really changed. Probably in the auto space, the only stock that we like is Bajaj Auto. I think it's been one of the steadier names in the marketplace. And in this market, you just want to buy the names that are showing relative strength or which are outperforming. So, the top 5 names in the banking space, some of the capital goods stocks, some of the oil and gas stocks, I think they are the ones, which we are recommending to our clients. Auto remains a complete avoid for us, and Maruti, given what it has done, I think there could be more pain in store in the days and weeks ahead.
All right, Gautam Shah there with his views on Maruti, the auto pack. I think he likes Bajaj Auto more than a Maruti right now. But it's time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta are here with their channel checks. Darshan, let's start off with you first.
Yeah, so one of the numbers that will come out tomorrow is Voltas. The counter is trading extremely weak. It's down almost 4.5%, and dealers anticipate that Voltas probably will disappoint as far as earnings is concerned. Blue Star, however, came out with a good set of numbers, but the general trend for Voltas probably on the projects business is expected to not do well this time around. The other one is Z Entertainment. Again, at the day's low, it's down almost 12%. It did manage to recover once the clarification came in from the management, but nevertheless, dealers anticipate that there is ample selling that is there in the counter, and that will probably continue. There is no buying support coming in at lower levels, and that's why they believe that the selling will continue. And the final stock is Reliance Industries. It's gone down almost 6 to 7% in the last 2 or 3 trading session. One of the large FIIs has been active seller in the counter. Some of the smaller FIIs have also been trimming positions in Reliance, down 3%. Probably they believe that selling pressure will continue. But Yatin, what do you have?
Well, Darshan, Apollo Hospitals is one stock which is gaining momentum in trade in a weak market. The stock is holding high. Of course, has come off from the day's high, beg your pardon. So, on an overall basis, dealers on the basis of F&O trends are recommending a buy on Apollo Hospitals. Remember, we had, the notification on exchanges which said that promoters have reduced, the pledge shares substantially, because of which there is some momentum in the counter. Titan, that is also one stock which is, almost flat in trade. But dealers do indicate on the kind of feedback that they're getting from domestic funds that a lot of funds are said to be sellers in few of these consumption names, including the likes of Titan. Finally, IndusInd Bank is also one stock wherein dealers do indicate that at lower levels HNIs are buyers in trade. The stock has come off significantly from the recent highs, especially post the quarterly earnings. But dealers do believe that at lower levels, this is one stock to be kept an eye on.
Thanks for that, Yatin and Darshan. By the way, this seems to be a serious risk off, because it's one thing to see a Yes Bank and some of the auto names drift lower. It's quite another to see Reliance continuing to correct the way it is. It's quite another scene to see Bajaj Finance as the second worst performer on the index for no other reason than the mood that the market seems to be in. This is not necessarily a Bajaj Finance sort of financial names related pullback, but one would believe largely some profit booking happening by funds in pockets where there would be money that they would be making. Bajaj Finserv is down about 3%, 7340 as well. NTPC 2.5%. You can see a lot of those kind of names coming off. And Reliance Industries is a dead giveaway of the market being in a risk-off mode. Nothing quite wrong there. 1298, not expensive on valuations, but certainly pulling back with a bit of a flurry. Z Entertainment, by the way, as we spoke about, 12% lower, 325. I believe the market would not be in any mood to have any kind of uncertainty with any company right now, which is why if there is a bit of dilly-dally on what can with the company's fortunes in the near term, the market would just want to probably stay away from that. Looking very wobbly right now. Let's get in our technical experts for the closing strategies. Manav Chopra, 142, 11,355 now. What are the levels that you see? You may not want to take an immediate trade right now, but what are the levels that you see on the downside for the benchmark indices?
See, the first lower support on the lower side, like I'd mentioned, is 11,200, and the next support that comes, then there are clusters of support Neeraj, around about 11,100. So any positional traders who wants to initiate some long positions should ideally look around 11,100, but this short-term momentum would see declines of another 150, 200 points on the lower side. So one should expect this drift to continue on the lower side. And most importantly, after a long time, we are seeing a weekly close in a single week breakdown. So that is going to act a good selling pressure on the upside. So this decline may not stop on the immediate basis. We could see a consolidation to negative bias, and after a series of decline that we've seen from the highs of 11,800, there could be a 1 or 2 day pause, but eventually the declines would be on the downside. 11,100, 200 would be the levels one can expect on the immediate basis.
Okay. Ruchit, are you taking any trades on any of the large caps? What's your top STBT? I'm presuming you would give an STBT and not a BTST.
Certainly, the kind of momentum is there that from a STBT perspective, I think PFC could be shorted at current levels. We have seen that the stock price have reached its immediate support of 110, and now I think the next support for the stock price is placed around 102, 101. That could be headed in tomorrow's trading session. So at current levels, from STBT perspective, one can go short on PFC, keeping stop loss above 110, expecting target around 102 tomorrow.
Okay, and Manav, you're giving your closing strategy to us? Your stock-specific closing strategy?
Yes. So I'll mention it on live. So basically, my first call would be a sell on MRPL, Basically, I've seen good sell-off happening in the oil and gas space, and MRPL has been one of the underperformers. The prices have breached its important support levels. So on the immediate front, I expect the price, since it has breached its support levels, could see declines towards the levels of 63 on the lower side. One can maintain a stop loss of 68.50. And my second sell would be a sell on Glenmark. There has been a very sharp decline in last 15 minutes into the stock, and it has breached its important support, even though the prices have witnessed over 5% decline on the intraday. But I sense there could be some sharp fall down move in next few sessions. So stop loss of on the upside of 608, and one can expect lower targets of 575.
Okay, that's a sell on Glenmark Pharma. Pull up the chart of Asian Paints. The numbers come out tomorrow. I think the stocks just recovered from the day's low. It did enter into that positive territory, just about flattish, but it's off the lows of the day. Siddharth, do you expect any sort of outperformance from Asian Paints, considering the GST rates were lowered last year in July for this industry?
Well, Asian Paint being a leader is a good stock to be in. Looking at the leadership quality and looking at the kind of distribution network it holds, I think these kind of companies are portfolio stocks and not a stock to trade out. However, having said that, crude prices definitely will play a headwind for the company, for its business in terms of inventories are concerned. But I think that would be more short-term driven rather than long-term driven. Although we have achieved our target price in Asian Paints as per our coverage. But having said that, with a long-term perspective, Asian Paint kind of a leaders should be a portfolio stock, maybe with a 1 to 2 year perspective.
Okay. I wonder if Avenue Supermarts has shown any kind of corrective move today. Flipkart has launched its brick and mortar grocery store. Well, Avenue Supermarts has actually inched up with that. Interesting move. Let's wait and watch. Siddharth, take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time. Just a difficult market, so I can appreciate very difficult to comment on what to do with specific pockets as well. But thanks so much for joining in today. Just one quick thought, Ruchit, on Bajaj Finance pulling back. Is there more downside here?
Yes, if we see the recent historical data, then 2950 was a very crucial support for the stock, which has been breached today. And the volumes in last 15-20 minutes post the breach of this 2950 support has increased. So this certainly indicates some negative momentum. I think although on the longer term degree or some medium term degree chart, this would be taken as a pullback move, but this pullback could get extended towards 2820 in next few trading sessions. So at current levels, if we get any minor pullback also again towards that resistance around 2940, 2950, one can create short positions for near term target around 2820.
Okay, gentlemen, stay on. We'll take in closing thoughts from you. It's turned out to be an ominous day and pretty similar in terms of percentage cuts to yesterday, but mind you, starkly different in terms of participation today, I would reckon. We'll talk about that in a bit. Down 150 points for the Nifty, the Sensex, Nifty Bank down about 300 odd points, and the broader markets too, my guess is, would have pulled off, cooled off and gone down quite substantially in the second half of trade, 1.33%. Actually not quite, but still under pressure for sure. The market breadth would have been adverse today. We'll talk about that in a bit. Let me first focus on the large caps, and you will see heavyweights which have fallen without there being any apparent reason. A bit of a risk-off mode here. The gainers, hardly anything to talk about, so let's bring the camera lower. Save for Titan, which is marginally higher ahead of the results, and Asian Paints marginally higher maybe. Not too many winners worth talking about. The losers, Z Entertainment, 4%, and then a 10% cut today despite management clarifications. Reliance Industries, another 3% cut. Bajaj Finance, 3.5% cut. Globally exposed stocks, Bajaj Auto, Tata Motors, both of them have corrected today 3%. Mahindra and Mahindra, so autos have taken it to the chin as well. And banks are not spared either. It's not just Bajaj Finance, which is in the financial space, but IndusInd Bank, Yes Bank, State Bank of India are amongst the other stocks that have corrected quite strongly today. I wouldn't be surprised if the volumes would have picked up and crossed the 33,000 crore mark quite effectively. I'm sure Devi and Navneet will speak about that. But Navneet, while the large caps have shown serious cuts for no apparent reason, and heavyweights have fallen. I'm guessing the scene is not too different at the broader end of the spectrum.
That's absolutely right, Neeraj. In fact, the selling pressure continues even in the broader markets. The market breadth has been pretty weak. So let me take you first through a couple of gainers, at least in today's session. Topping my list is CG Power. The stock was up. Remember, yesterday, Yes Bank acquired stake after invoking the pledge. So the stock's closing off today's high with gains of nearly 5%. The other one is Canfin Homes that went up in today's session. If you look at the intraday chart, it did open just with mild bit of gains, but it picked up in the afternoon session. But once again, the gains were limited only with 2% there. C8 was the other one which came out with the numbers. Operationally on year-on-year basis, the numbers were weak, but this stock has been underperforming. It's down 20%. A lot of technical analysts now suggesting it's bottomed out. So the reaction actually to the earnings was positive, 2% higher. Shimaru from the small cap space saw some bit of buying momentum in this weak market. So that was up almost 4%, but towards the end, that also gave off a bit of its gain. New kid on the block, Neogen, had a good listing in a weak market like today. So kudos to that. Neogen saw the price was 215 and the stock saw gains of nearly 20 to 25%. Let me take you through a couple of losers. Now, a lot of pharma counters were weak. So Kedila Healthcare, that touched 52-week low today. The chart will give you an indication, 4.5% lower at 285. Glenmark was the other one from this pack which fell in today's session. Glenmark closing the day with cuts of 6% and almost at day's low. Bandhan Bank in last half an hour saw some selling pressure. Remember, the earnings for this one was good, 3.5% lower for this. And your usual suspects, Ever Ready locked in lower circuit of 10%. Cox & Kings, that touched 52-week low. Some selling pressure seen for Cox & Kings, lower almost 8% in trade. And also other stocks like BHEL, that was weak. J&K Bank, and from the media pack where you had Dish TV and Z, but today you also had something like Sun TV where selling pressure was seen. Sun TV closing around the levels of 526 now.
All right, so carrying forward the losses from last week, which was a truncated week, 3 trading sessions, all 3 trading sessions, we actually had marginal cuts. This week started off Monday on a weak note and carrying forward to Wednesday afternoon where we are at right now. Big cut coming there. Nifty now sub 11,400. Just want to quickly pull up while Namit highlighted individual stocks, just to give you a quick snapshot of all the stocks in the mid cap and the small cap space. We'll just quickly get you the MRR for the mid cap 100, which is down 1%. So Edelweiss Financial Services, this is one of the gainers, has been losing ground recently, but you know, you've got some buying coming in at lower levels. Ajanta Pharma, Indraprastha Gas, you've got a Union Bank of India, a Syngene, which has moved up about 1% amongst the bigger losers. Entire real estate as a pocket has looked weak in today's sessions. Oberoi Realty, which was down 6%. Then you've got the likes of Reliance Capital, Glenmark Pharma, Dilip Bilkon, all of these names looking very weak.
Okay, let's see how the volatility panned out. Remember, we've given up almost 150 points in trade today, 100 points yesterday, but the VIX was flattish yesterday and even in today's session. It is at elevated level, goes without saying, but in the last 2 days at least, VIX has remained flat. And in terms of participation, let's see how the turnover has panned out. Tomorrow being expiry, it will pick up, but today also it picked up, at least on the future derivative side. NSE F&O turnover about 13.2 lakh crore, and on the NSE cash side, just about the average of 31,000 crore.
All right, and a quick look at the contributors, and then the market breadth picture will come up. These are the contributors. Again, your heavyweights. The picture doesn't change. It's pretty much a replica of what you've seen over the last few days, which is the Reliance, HDFC, and HDFC Bank. Big heavyweights there, dragging the index lower. Components on the gainer side keep moving up and down, but the largest heavyweight there in today's session is the TCS with a marginal 1/4 point contribution coming in there. The advanced decline ratio thereabouts, no points for guessing. By the end of trade, it worsened, was almost 1:4 towards the end of trade. So that's not a healthy sign towards the end of trade as well. That's what you've got in terms of the market close today. Quick opinion from both our technical experts as to how we set up for trade come tomorrow. I'll start off with you, Ruchit, Jain first.
I think today, if we see, we had a gap down opening post yesterday's breach of support, and there was a good follow-up selling seen throughout the day. So there is a high probability that this sell-off could continue in tomorrow's session as well. And for tomorrow's trading session, the key levels to watch out would be the range of 11,260 to 11,310. I think maybe in the morning trading itself, we would see this 11,260 to 11,310 getting tested.
Manav Chopra, what about you?
See, if you're looking at the banking index, since it has breached its important weekly support levels, and the breadth of the market overall was very weak. I don't sense there could be any big pullback in the markets. There could be in fact series of decline going forward, and the important moving averages which are lying for the bank nifty is around about 28,200 to 28,300. So there is further room of at least 500 to 700 points decline that can be seen in the banking index. So I think some select private banks and the PSU banks will continue to witness those kind of selling pressure, but eventually I think those could be the levels where some medium-term investing should eyed nearby. But I wouldn't recommend jumping the guns and giving buy recommendations at the current levels. One can take a pause for long positions, but eventually can look for some better levels in the near term to buy near the support of 28,200 to 28,500 levels.
All right, gentlemen, we'll leave it at that. Ruchit as well as Manav, appreciate both of you taking out the time and joining us this afternoon.
Thank you.
And on that very somber note for the markets, it's a goodbye from Navneet, Neeraj and myself and the entire team that's put this show together. Thank you so much for watching.